Hi, this is Mark Thomas from Trade on Track with our fourth video in the series in developing a time-based trading strategy that we're doing for winnersedgetrading.com. In this particular article, we're talking about when to move the stop loss from its initial position up to a place where we can lock in some profits, and also where we exit the trade. If you need to find out the exact details, we have an article published on winnersedgetrading.com. I'll just go through one example. So yeah, as I said, you really need to read the article to see the exact details, but let's just go through one example here which happened on September 2nd. Now my server time is GMT +2 and New York time is currently GMT -4, so we have a 6-hour time difference. As you know, we enter our trade when we have a break of the 9:20 AM candle, New York time. So that's a break of the 15:20 candle on my chart. So this is the candle here. We have a break. We need a 3-pip break, if you remember. So the high on this 15:20 candle, not sure if you can see it, just move it up a bit. Okay, so the high on the 15:20 candle is 1.4204, so we would enter at 1.4207, which we would have triggered an entry right here, 4207 right there. Which is on the 9:30 AM candle. Now if you're setting a pending order, we would have to set a pending order to buy at 4207 plus our spread, which might be 2 pips. So we would actually set our pending order or a buy stop at 1.4209, which would be about there. But that would get us in at 1.4207 as a bid price, because our candles in MetaTrader 4 are drawn on a bid price. Okay, so as soon as we're into the trade, we can calculate our risk, which is the entry price. If we just need to use consistency here, so we'll be using a bid price, would be 1.4207. Our stop loss is 3 pips below the 9:20 candle, and the low of that is 1.41938. So our stop is actually 1.41908, which is, if I just position the cursor just there, and you'll notice where I've got the cursor and the horizontal line there, it doesn't get taken out by the other prices, so we stay in that trade. Our initial stop does not get hit. Okay, so our risk is calculated as the entry price minus the stop, so that's 1.4207 minus 1.41908, and I've calculated that risk as 16.2 pips. Okay, so if we were taken out, we would lose 16.2 pips if our initial stop was hit. Now the way we calculate when to move our stop loss to a point where we can lock in some profits, we calculate that as 1.5 times the risk. Okay, so we've got 1.5 times 16.2 pips, which was our risk, and that equals 24.3 pips. So what we do, once we have a candle close where it's past the 24.3 pips point, then we can move our stop. Now 24.3 pips above our entry, which was 4207, takes us up to 1.4231. Okay, So what we can do is, as soon as we've entered the trade, calculated our risk, found out when to move our stop, we can put a horizontal line at that point. So 1.4231 is right there. 231, close enough. Okay, so what we're looking for is a candle close. We're on a 5-minute chart, so we're looking for a candle to close above that line because we're in a long trade. If we're in a short trade, then we'd look for a candle to close below that line. We remember we didn't get taken out here, so price has continued up for us. It's closed above the line here, which means we can move our stop loss, and we calculate the position as to where we move the stop as 0.4 times the risk. Our risk was 16.2 pips, so 0.4 times 16.2 is 6.5 pips. So we would move our stop to a position where we have the entry price 4207 plus 6.5 is 1.4213 and a bit. Alright, so draw another line there. $42,135. Okay, so once price closes above this first point, which we have there, we move our stop up to here, which is locking 6.5 pips of profit in for us. Now, if you don't have fractions of pips, just round to the nearest pip. This particular broker does have fractions of pips, as you can see. Okay, now you can see our stop was moved to there, and from that point on it kept going up, which means our trailing stop was not taken out, so it continued on up, fortunately. And the final part of our exit strategy is to exit at 1:50 PM. Now, according to my charts, which are 6 hours ahead, that is 19:50 PM, or 19:50, which is right there. So it's that red candle, and we would enter right at the beginning of that candle, or the close of the 1:45 PM candle. So that is, our exit would be 1.4282, which is a nice profit. So that's 1.4282, and our entry was 4207. So we captured about 70 pips of profit there, once we take into account spread. About 73 pips, I believe. Yeah. So that was a nice trade. As I mentioned, check out winnersedgetrading.com for the full article series, which has all the details and also some questions and comments by other readers. Thank you.